Support and resistance areas could be one of the most powerful indicators that can show you where the market can go next. But one of the ways to find support and resistance areas is by looking at previous support and resistance areas. This is how we do it.
Support.
So if we try to spot a support area, there's actually several. A support area is done whenever there's been a rise and then a drop. During this drop, you have to see that there's been a rebound, right? Like a rebound meaning that there's been a reversal. So if prices went down, but they stopped going down, they just started to go up afterwards. This shows that prices have respected this price area, meaning that this is a level of support. You would just trace a horizontal line at this level and see if prices hit there in the future, but they haven't. This applies wherever the market's going, whether it's going down or whether it's going up. You can see that the price went up from here and went back down. But in order for this to be a support area, the price has to go down, but then it has to reverse and go back up. That's when you can confirm that the price has indeed respected that level. You can actually see that the price did respect that level because the price went down, met at that same level as the past, and it was able to respect because prices have respected it before. The price has respected it here, and then the price attempted to break it, but they couldn't, and it shot back up. And afterwards, when the price went back up and it went back down, it respected it this time and it respected it this time. So one of the general rules with support and resistance areas is that the more times prices has respected that level, the stronger that level is. So that makes it likely that if the price is going down and there's a very strong level nearby, that prices are very, very likely with a high probability going to go down and hit that level and rebound. Here's another example of a support. You can see that the price was going up, but afterwards, whenever the price is going to go up, it's going to go, it's going to have swings. It's going to have ups, downs, and so on. But if we find a support, you can actually find one right here, right at this level. The price over here, it was able to go up and then it went back down. But importantly, that after it went down, it went back up. So the price did respect this area. That means the next time that the price gets close to this area, we need to be aware that prices might respect this area because they respected it before. You can just trace it like this and look, the price went up, went down, and what happened after it went down? It respected it one and it respected it 2 times. The more the price respects the level, the stronger that level becomes.
Resistance.
If you see here, the price went down, went up, went down, went up, but after it went up, it respected this high level. So we would trace, this would now be a resistance, by the way. We would trace like this because the price, just invertedly like a support, the price went down, went up, but what's important is that when it went up, it couldn't go up more and it just went down. That indicates that prices weren't successfully able to go up at this price, which means they respected it. Afterwards, when the price went down and went back up, and when it went back up and got close to this level, it respected it. It respected it because the price didn't successfully break out of it, but instead decided to meet that level and go down. That means that there's a strong respect for prices when they meet that level. As the price went down and went back up, it did the same thing. It respected it, but now it successfully broke it. Now you might be saying, well, if it was successfully broke it, doesn't that weaken the resistance? Not necessarily, because the market moves in a way where there doesn't have to be an absolute meaning of where prices respect indefinitely. There just has to be a pattern in where prices respect, because remember that these are all by probabilities. Just because the price respects an area doesn't mean that there's more than a 90% chance they're going to respect it. And if it breaks through it, obviously it's not a 90% chance anymore. Maybe it's like a 60 to 70% chance, but it's still a chance nonetheless. It's still a pretty big chance. Even though the price broke that level, remember what we said before, when the price is going up and went back down, what do you see here, this pattern? Well, if the price is hitting that same level, there's still a strong respect towards this level. What happens afterwards, and this happens in the market, when the price hits that level from a resistance before, but now it's turning into support. Buyers and sellers are tending to respect that level in general. And you can see that's true because the sellers weren't able to successfully sell below this level. Rather, the buyers decided to aggressively buy and didn't let the sellers proceed more selling. So that made the price to go up. When you have a pattern, let's say when the price is going up, right? And then it goes down, hits that same level, but then it goes right over here. But then let's say it breaks below this level. Well, let's say it went back up to this level. Where do you think the price is going to go? Is it going to go up? Not likely. It might actually go down more. You see what I mean? So what a support was before can actually form into a resistance. And a resistance before can actually form into support in this case. And this applies for all contexts in every market. You can do this in stocks, you can do this in Forex, you can do this in futures, you can do this in cryptocurrency. You can literally do this with any market that just has priceable markets. It doesn't have to be equity specifically, okay? So those are the powers of using support and resistance areas. Hope you guys enjoyed that, and don't forget to beat the hell out of inflation, okay? See ya.